Good morning, Thursday, July 24th. I am Zach Howard, and I am still rocking the bull hat here today as we have markets continuing to accelerate into all-time highs. Not only that, we are getting the frenzy back in stocks, meme coins, meme stocks, companies that are going bankrupt, Wall Street bets, what's going on? Well, everybody's excited because the volatility brings all the cheerleaders out of the stands. People are more excited to buy the highest beta trades, the highest risk assets. They are the ones that perform the best in this environment. Speaks to some stats here. Retail investors love non-profitable tech like they did back previously in 2021. Equity, your whole indicators super high since December. Forget all about those tariff headlines. Like I keep saying, it's all a product of the volatility. Okay, the math matters more than narratives. All while analysts out opponing about Tesla's earnings, robots this and yada yada, how great everything is. Like I said yesterday, none of that matters in this environment. It's all about the volatility regime. We're in a 15 VIX approaching. That is when you can buy Farcoin and you will see the acceleration in price. We have extreme positioning on the wrong side of the market for most of Wall Street. We had implied volatility on the SPY options, that S&P ETF, 2.1 on a 1-year Z-score, 91% implied volatility premium. People are panic buying puts and selling calls on their winners to try to fund that. We also see now in the S&P 10-day realized volatility, the lowest has been in a year, 5.4%. So let's look at math, markets, scientific approach, Benoit Mandelbrot, which I reference a lot in my work, through fractal patterns, where we could be setting up to be in 2 to 6 months. And we just want to look at, do markets mean reverse, which they often do, but timing that is the most challenging part. Great chart here on the left from guys over at Tier 1 Alpha who do amazing work when it comes to volatility regimes and trying to figure out where the flows are coming from the markets, from systematic deployment of capital based on the volatility regime. We have markets at all-time highs, the VIX near these low levels below 15. Where does it rank in other times of volatility spikes versus new all-time highs? Back in 2020 or 2000.com, we had a higher volatility, higher market. Not so much here today. We have lower volatility, higher market. So current VIX levels shows potentially that we could continue to fall, get as low as 12 on the VIX, pushing that S&P up to 6,800 with more systematic buying. But when you get down around these 15 levels here on the VIX, the risk reward are kind of really pushing the envelope. It's not as appealing if the VIX was a little bit more elevated, obviously. But Mandelbrot teaches us that a volatility eventually clusters, and then when it does break free, that ball in the water, it shoots massively higher. But for now, this is the patterns. We continue to say risk on until it's not. The macro backdrop continues to support risk on, as well as the monetary and the fiscal spending, as I've talked about. Hedge eye, the guys that do the great work on the macro standpoint of forecasting global growth, inflation, etc. policy there is saying it's going to be a quad 2 outlook for August and into the fall, which is a reflation of growth and inflation accelerating, which is risk on for most commodities, tech companies, higher beta trades. Not so great if you want to be conservative with your trades like bonds, etc., which are a risk off component that don't work in this environment. So where could we see potentially scenarios going here? Had AI help me map out 3 potential probabilities, looking through the lens of Mandelbrot, where we're to with the VIX here. It's on here, 40% probability that we see this low VIX, this low volatility regime masking for a while yet, but potentially setting up the stage for a rapid regime shift sometime over the next 3 to 5 months. When that is and what the trigger of that is the missing link, and that's what makes markets challenging, obviously. Scenario number 2, we continue to have this deception phase, as we've worded it here, with 35% probability, where VIX just continues to chop around in this lower 15 and under bucket, and the far coins of the world really perform well and outperform much more traditional trades. And the head scratchers of Wall Street trying to opine on valuation look stupider every day. It's nothing to do with valuation at this point when you're in this volatility regime. It's more to do with math. So that is a 35% probability potentially here. We're looking at through that lens. And then on to, we break much higher, a lower probability than the other two previous in the next few months, but potentially here, 6 months is a long time. Today's market's 25% probability here. And we could see a big pullback short term if we get a volatility spike, potentially 8 to 5, 8 to 10, 15% potentially. You get a volatility spiking higher. Time sale, we don't know. That's the challenging part with all this. Summary actual items. None of this is investment advice, just something to think about as we look through the lens of volatility in this current regime and where it leads from here. But let's tap another book here, George Soros's The Alchemy of Finance, where he would say to get long of a bubble that keeps inflating, and that's what this is. So until the trend breaks, that is your friend. That's what I got for you today. Tomorrow, I got some great Bitcoin charts. We'll be back then. Have a more bullish approach to end the week. Have a great day. See you tomorrow.